News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, we begin with the global trade war heating up. The European Union is responding just hours after President Donald Trump's 25% tariffs on steel and aluminum imports came into force. The EU launched countermeasures with its own duties on more than $28 billion worth of American goods. We get more from Bloomberg's Rosalind Matheson in London.
Obviously, they're going to target US steel and aluminum products, but they're also going to look at textiles, agricultural products and home appliances. And they're going to look back at some of the products that got hit in previous trade tensions with Donald Trump. And that's some of the kind of big name US products, including bourbon and motorbikes. I mean, the EU describes this in the statement as strong but proportionate, but certainly coming out of the gate pretty hard this morning.
Bloomberg's Roz Matheson reports the EU will immediately begin consultations with member states. Adoption of the tariffs is expected in the middle of next month.
Well, Nathan, before these new tariffs took effect, President Trump had threatened to double duties on Canadian steel and aluminum to 50%. The president walked that back after the province of Ontario backed down from plans for a surcharge on energy it sends to the U.S. At the White House, Trump was asked if he's worried about tariffs leading to a recession.
I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
And later, in remarks heard here on Bloomberg, President Trump told executives at the Business Roundtable more tariffs are coming, but they'll pay off if they bring more operations into the U.S.
Well, Karen, billionaire Ray Dalio is comparing the trade war to Germany in the 1930s. Speaking at a CNBC conference in Singapore, the Bridgewater co-founder warned that tariffs could lead to fighting between countries, which will have consequences. He emphasized the importance of understanding the mechanics of the situation.
Well, Nathan, more fallout this morning from the global trade war. A major Wall Street firm is cutting its forecast for the S&P 500, and we get the very latest from Bloomberg's John Tucker. John, good morning.
Good morning, Karen. Goldman Sachs cutting its year-end target for the most widely watched stock index to 6,200 from 6,500. The firm cites the sharp recent decline in the Magnificent Seven stocks. The downward revision also reflects the recently reduced GDP growth forecast of Goldman's economics team, a higher assumed tariff rate, and a higher level of uncertainty. Meantime, at Charles Schwab, Liz Ann Saunders says the fuller story of what's going on is under the surface of the index.
At the average member level, the maximum drawdown this year is 14%. It's more than 30% for the NASDAQ.
Well, the S&P 500 yesterday did slip another 0.75%. It continues to flirt with correction. The NASDAQ 100 firmly in correction. That's down close to 13% from its peak. And then the VIX gauge of stock volatility is near its highest since August. In New York, I'm John Tucker, Bloomberg Radio.
Thank you, John. Well, tariffs aren't the only thing on investors' minds this morning. We get a key reading on inflation before the opening bell. Bloomberg's Michael McKee has more on the February Consumer Price Index.
With tariffs on their way, inflation may take a back seat today, but it will be important to the Fed and in the longer run to the economy. As forecast, February CPI would represent only modest progress toward the Fed's 2% target, but it would be progress. That's what the central bank wants to see as it contemplates how it may have to react to price increases stemming from taxes on imports. If inflation is contained, policymakers can leave rates unchanged this month. The central bankers will be watching categories including airfares, auto insurance, and as always, housing. Michael McKee, Bloomberg Radio.
Karen, we have new developments this morning in efforts to end the war in Ukraine. The U.S. and Ukraine have agreed to a 30-day ceasefire in the war with Russia. The deal now awaits approval from Russian President Vladimir Putin. Here's Ukraine's President Volodymyr Zelensky speaking through an interpreter.
Ukraine accepts this proposal. We consider it positive. We are ready to take such a step, and the United States of America must convince Russia to do the same. That is, we agree, and if the Russians agree, silence will take effect at that very moment.
And in return for Ukraine's acceptance of the U.S. proposal, the Trump administration agreed to lift its freeze on military and intelligence aid to Kiev.
And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.